If you're new to investing or have been investing for a while but not seeing the results that you want, you came to the right video. Because today I'm going to tell you the exact steps I took to get an average stock market return of 151%. This is my M1 Finance account that I opened 3 years ago. As of recording this video, my Amazon position is up 76%, Costco up 96%, Facebook is 130%, Alphabet up 148%, Microsoft up 179%, Square an impressive 203%, and finally, PayPal has a 225% gain. And right about now, all these so-called finance gurus will say things like, hey, buy my stocks in the Psychology of Money course for just $762. But I'm all about transparency here, so I'm just going to tell you straight up how you can also get 100% plus return on your stock picks. It's a very simple two-step process, and here it is. First, you buy a stock once, and second, you just hold it for the next few years. And congratulations, if you can do that, the original 40 cents you put into Amazon 3 years ago is going to turn to 70.4 cents. Your Microsoft investment of 20 cents will turn to 55.8 cents. And PayPal's massive 225% gain will turn that 20 cents into a mind-boggling 65 cents. Now, before you start calling me a liar, just know that I really did earn the average stock market return of 151%. But that's only when I calculate my returns from my very first trade of 1999 back on September 6th of 2018. Because here's the reality. I didn't buy Amazon or the other shares just once and never bought in again. I continued to buy into Amazon, into Facebook, into Square, and my other stock positions over the years because I believe in their long-term growth. All this means my real Amazon position is currently only up 12.99%, my Microsoft position is up 29.71%, and that incredible gain from PayPal is actually only 16.56%. Now, when all those financial experts and YouTubers tell you guys to dollar cost average into a position, this is what actually happens to your unrealized gains. And I wanted to make this video because just like how people show off their flashy lifestyles on social media, you see a lot of personal finance channels highlighting their crazy stock market gains or buy this stock because it's about to explode and go to the moon, which quickly turns investing into chasing the most gains in the shortest time frame. And if you're not careful, you end up taking on more and more risk in search of that next 10x, 100x, 1000x return to show off your amazing stock picking skills. Because let's face it, having your Tesla position up more than 1000% like Jeremy from Financial Education sure looks better than being up only 24.05% like I am. But just like how influencers rent a room that looks like a private jet to appear rich when they're actually not, chasing the next 100x stock to show off is a quick and easy way to lose a lot of money and ultimately set you back years from reaching your financial independence. Because let's be honest, all those people cherry pick their best performing stocks to show off in their videos, and I guarantee that they have just as many positions deep in the red. So here's a real secret to becoming a stock market millionaire. Don't go chasing gains for bragging rights. Instead, research and find companies you love for the long term and just dollar cost average in on a consistent basis. It doesn't matter if the stock is down in the short term. For example, my MasterCard position is currently down 7.31%, but I've done my research and I believe it's going to continue to grow, so I'm buying the dips to lower my cost basis. On the other hand, you might be asking, hey, what if the stock is trading above your cost basis and you're going to be averaging up into your positions? And I'll actually let Jeremy from Financial Education answer that for me.
Planet 13, so this one we're doing really well on, 53,000. I made a mistake on this one, okay? I kept buying heavy in all my other accounts, Planet 13, as the stock was rising and rising and actually averaging up. It's really easy for me to average down on a position, just like psychologically, most people have trouble averaging down on a position because they begin to feel unconfident and they think they made a mistake because the stock's going down in the short term and things like that. For me, it's the reverse. For me, I have a lot of trouble averaging up on a position. I love to average down. It's actually really easy for me, but averaging up's tough, okay? And so I continue to add Planet as it went up to $2, $3, $4, and even $5. But when it came to this account, I never averaged up. Maybe I fell in love too much with that $1.25 cost basis. I don't know. All I know is I should have added that position more aggressively. It would be a 6-figure plus position if I just added more aggressively when it came to the planet there. I should have done it, man. I went too baby soft, overall in this one, okay?
So like he said, never fall in love with your low cost basis because, for example, if you believe that Tesla is going to be trading at $3,000 a share in the future, does it really matter if your cost basis is at $800, $1,000, or even at $2,000? And sure, maybe the stock market will crash and you'll be able to buy in when everyone is panicking. But who's to say that you won't be the one panicking as well? Because one of the things I consistently have to even remind myself is that timing the market is more important than timing the market. And here's an easy visualization of that concept. This is the S&P 500 going back 5 years, and every time it hit a new record high, we had news articles, people on CNBC, and all these personal finance YouTubers talking about the next big upcoming stock market crash. And sure, we had corrections and crashes along the way, down 10% here, 17% there, and 32% last year. But if you zoom out all the way back to 1981, the S&P 500 has returned more than 3,600%. While it's very hard to predict short-term fluctuations, in the long term, quality companies in the stock market as a whole have gone up. So don't get caught up in chasing stock gains, just buy and hold for the long term and keep adding into the positions that you have high convictions in. Because let's be honest, I'd rather brag about how I grew my portfolio into millions of dollars by dollar cost averaging in, instead of how my initial $1,000 in Tesla shares is now up 1,000%. But I don't know, maybe it's just me, but let me know down below if you feel the same way or not. Like and subscribe if you want to stay up to date on my investing journey, and stay tuned for my next video because I'm going to be updating you guys on how my portfolio performed for the month of August. But with all that said, thanks for watching, happy investing, and I'll catch you guys all next time with more financial shenanigans.